Happy Friday, traders. Welcome to the end of the week. What a week it's been. But let's first start off with something important that happened yesterday. Aussie employment data. It has changed RBA pricing in a big way. So yesterday, the employment data market was expecting unemployment rate to go marginally from 4.2 to 4.3%. Not a big deal because the unemployment rate in Australia has ranged from 4.1 to 4.3% all year, so it's been super stable, and certainly the RBA has not been worried about employment in cutting rates. But yesterday, the unemployment rate surprisingly jumped up from 4.2 to 4.5%, the highest it's been all year. Before the RBA announcement, before the employment data came out, market was pricing about a 40% chance of an RBA cut on November the 4th, next meeting, and that has now jumped up to over 70% with that unemployment rate going up. So now the market is expecting a rate cut come early November. RBA does have an issue though, is that inflation has been going up. Monthly inflation's back up to 3.3%. But they do get some quarterly third quarter CPI data at the end of October, just before the meeting. So I guess the market will be praying that does not lift off, because if it does, then there's going to be trouble about that rate cut. But certainly that data yesterday did change a lot of things for the Aussie market. Aussie dollar was trying very, very hard to get above 65 cents. It was trading above 65 before the number came out, and that now has been smashed back down below 65, and obviously it is a bit of a weak link with now RBA back in play. Anyway, moving along, all focus for the market has been pretty much gold. The whole world, every headline is all about what gold is doing. Absolutely phenomenal. You can throw away the technical analysis, you can throw away fundamental analysis, you can throw away correlations. Nothing matters at the moment. It has been an absolute one-way street. Yesterday it opened on its lows at 4,200. And it rallied $130 yesterday, up almost 3%. Closed on its highs at 4,330. We've just reopened, and from the open up she goes. And as we speak, we're trading around about 4,360. Absolutely amazing. Now, if someone would have said to you at the beginning of the year that gold would be trading at 5,000 at the end of the year, you would have thought that they were a lunatic. But here we are. We've got 2 months, a bit over 2 months left before the end of the year, and gold is only 15% or less than 15% away from 5,000. So 5,000, the way gold is trading with a couple of months left, is it realistic? It 100% is realistic. So if you're looking for topside targets, that is probably what I'd be looking at now. Anyway, with what gold is doing though, it should be a bit of a warning for risk in general. The reason why the market is buying gold so aggressively, is maybe a loss of confidence in the global monetary system. That is not good. Gold is a safe haven. So obviously the market is worried about something. So going out and buying risk and especially at levels which are super elevated, I think that it is giving a warning for that. So talking about risk, moving on to equity land, S&P Nasdaq. They did close in the red last night, marginally around 0.5%. Doesn't look like much, but intraday we've seen some really strong volatility in US equities, where the market has tried to buy equities back up towards record highs, but then they've been smashed lower. So we've seen some big ranges. And what I'd suggest is that if we have a look at the way the market ended last week, we had bearish key reversals on the techs for both S&P and Nasdaq. That's basically a top signal. We've talked about this before. Textbook does say that you expect in the next week a new low. We haven't seen that yet. We've still got 1 day of trading. Could be today. Nasdaq that lows around about the 24,200 level. So if that does break, I think we could see some floodgates lower. So buyers definitely short for US equities. Wouldn't be running in buying those at current levels. Bond market, we've seen some moves there. US 10-year yield has finally cracked 4%, trading a touch below 4%. So yes, bonds are a safe haven as well. So again, some warning signs that things aren't good. Now that matters for currency markets, because currencies, US dollar generally does move with what happens with US yields. So US yields up, US yields lower, dollar lower. So we are seeing that at the moment. Euro's starting to get a bit of life again, but the big one, the one that has the highest beta to changes in US yields is dollar yen, and we're seeing dollar yen back down towards 150. So those US yields keep selling off. Dollar yen's going to go with it. Not imagine sub 150. So I wouldn't be rushing out buying the US dollar, especially against the yen, with what yields are doing. So look, the focus for markets at the moment, 100%, is what's happening with gold, and obviously silver as well. That was up $2 last night. It's trading at the moment above $54. Obviously, 55 is a bit of a psychological level. We are at record highs. So throw the text out the window there as well. That's the biggest focus for market at the moment. And just lastly though, crypto, obviously Bitcoin is struggling. It's under 110,000. So I'd imagine I wouldn't rule out, especially if risk rolls over, a run down towards 100,000, breaking that, let's see. But anyway, be careful out there. They are dangerous markets. Good luck with your trades, and we'll catch back in with you next week.